concise approach to top-down market strategies and the forces affecting investments. That's the spoken word on investing.
Time to get the spoken word on the economy and the stock market, as we do from time to time, from our chief equity strategist, John Blank, joining us via Skype from the West Coast. John, no November rate hike. How's it looking for December?
December's about 70% odds, Terry. That's pretty stable after last yesterday's FOMC meeting. So I would count on a 25 basis point rate hike in December. The real issue will be the dot plot story of 2017, how many more rate hikes that'll be coming in 2017. That's the real thing the market will trade on in December.
Okay, you wrote recently about two provocative insights hailing from the advanced or rich countries. What are they?
Yeah, Terry, this is the story of that 2017 and the Fed rate hikes. They're boxed in because there's no growth, GDP growth coming from the rest of the world, particularly Europe. And there's also the second point that needs to be made is there's no inflation. There's very low inflation, almost deflation in Japan and Europe, and even China has very low producer price inflation. So we just don't have the inflation, which means there's not enough demand out there, and we see that in the low growth rate. So these are intertwined situations which keep the stimulus and the monetary policies very, very accommodative outside the United States, which means basically whatever happens with the Fed, they just don't have much to do. Whether they go up 25 basis points or not is basically irrelevant. They can't do very much. They'll stay accommodative. That's the basic thing investors need to keep reminding themselves of.
So bottom line, they're probably going to take this glacial approach, right, to raising rates?
Right. Very good word, glacial approach. That's it. They have no choice. There is no option. Because of these two situations, because of the low growth outside the United States, because of the low inflation rates, there's just no way they can do anything. And so what they do is already priced in, and what they do is basically fairly insignificant.
All right, let's talk about the market here before we move on to some individual stocks. So the focus now is on the presidential election. We are just days away from it as you and I stand here and talk. What does the election do for the prospects of that normal Q4 rally that we would always see?
Yeah, we're gonna see that rally on the back end of this election. So what I would expect people to remind themselves of is what happened in June with the referendum to leave the EU in England. We're very similar to them. We're going to have a tighter election than people think, and then we're going to get a presidential nominee out of this, and typically markets will price it and will hopefully move forward with a rally into the year end based on the fact that the rate hike's already priced in and earnings have come out reasonably good for the S&P 500.
All right, let's talk about sectors and stocks here. As far as you're concerned, material sector has risen to a very attractive, huh?
Yeah, it is true. This is the flip side of the story is that we are seeing a bid placed on commodities, particularly iron ore and steel, are getting very strong Zacks ranks. So what company I like and I want to talk about in this video is BHP Billiton. At some point, this stock is going to be a purchasable. It's a strong buy. Zacks #1 right now. It's something everyone should keep on their radar screen. These big resource companies. As China turns around, and as if we do see some producer price inflation in China build up steam, this is where you want to go.
All right, and also healthcare and infotech staying attractive.
Right. These two things, first of all, healthcare, the one you want to stay with is the HMOs because these are the Obamacare subscriber additions that are building up revenues and profits. No, you don't want to go towards the medical products or the medical drug companies. You want to stay with these HMOs. So the company I like is WellCare Health Group. They reported last week and beat. Stock's pricey right now because of the beat, but I'd wait a little bit on the pullback. There's going to be some day trade shorting. It'll take that stock price down. In a few weeks' time, you want to look at WellCare Health Group for an entry point. The other one I like, Terry, is the infotech sector. I cannot say enough about semiconductors. They always stay strong. They're always the industry that I see very consistently performing well, which means the upgrades of earnings are consistent. For long-term investors, you've got to find a play, and one of the newest plays that also beat recently is ST Micro. They reported just a week ago, and they also beat and saw a raise. So again, you're going to want to hold off on buying them for a couple of weeks until they get shorted back down. But This is a stock that's valuation is very attractive relative to its peers, and we got the growth story.
Let me circle back to healthcare for just a minute, John. Do you see the big increases in medical care for 2017 as any kind of negative for this sector?
It's all going to depend on this election. If we get a Hillary Clinton election, then I don't think there is a negative for healthcare HMOs, but there's probably is a negative for the drug companies. So it's going to depend on the sector, and you really got to be careful with healthcare right now and wait till this election plays out.
All right, that's the spoken word from our chief equity strategist, John Blank. With John, I'm Terry Ruffalo.